The SCHD Millionaire Strategy, Unveiling the Path to Early Retirement. You've probably seen headlines about millionaires made from crypto startups or real estate, promising overnight riches. But what if I told you there's a quiet, reliable path to financial freedom and even millionaire status that doesn't involve luck, genius timing, or day trading? This path leads straight through SCHD, the Schwab U.S. Dividend Equity ETF. Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this valuable information. Now let's continue. The SCHD Millionaire Strategy, Unveiling a Path to Wealth. Today, we're pulling back the curtain on the SCHD Millionaire Strategy. This isn't a fairy tale. It's a powerful blend of disciplined investing, the magic of compounding dividends, and the incredible force of time. Together, these elements can build seven-figure wealth right before your eyes. It's not about fleeting trends or risky bets. It's about robust, steady growth. Why SCHD is a millionaire builder. So, what makes SCHD such a potent wealth-building machine? Focus on quality companies. SCHD meticulously selects high-quality U.S. companies renowned for their stable dividends and strong financial fundamentals. We're talking about household names, the giants that underpin the American economy, like Coca-Cola, PepsiCo, Texas Instruments, and Verizon. These aren't speculative startups. They're established businesses with a history of rewarding shareholders. Proven dividend growth. This ETF specifically targets stocks with a proven track record of consistent dividend growth and robust cash flow. This isn't just about getting a payout. It's about getting a growing payout year after year. Imagine a tiny stream of income that steadily widens into a powerful river. Rock-solid performance. Since its inception, SCHD has boasted a rock-solid track record, averaging impressive annual returns that include both price appreciation and dividends. While past performance is no guarantee of future results, its historical journey paints a compelling picture of consistent growth. Ultra-low expense ratio. One of SCHD's hidden superpowers is its incredibly low expense ratio. At practically negligible fees, nearly every dollar you invest stays working for you, not for management fees. Think of it as investing with almost no friction, allowing your money to grow unhindered. This translates to more money in your pocket over the long haul. Long-term growth with consistent income. The bottom line? SCHD offers the best of both worlds. Long-term capital growth coupled with consistent income. It does this at scale, providing diversification and stability without forcing you to take on excessive, account-blowing risks. The power of time, witnessing wealth snowball. Let's paint a vivid picture of how this strategy unfolds over time, like watching a tiny snowflake gather momentum and transform into a massive snowball. Your journey to seven figures. Imagine you start your SCHD journey with an initial investment, say $10,000, and commit to adding $1,000 per month consistently. You're disciplined. You let every dividend payout automatically reinvest, buying more shares, and you steadfastly stay the course. After 10 years, at an approximate 11% annual return, your investment could swell to over $300,000. That's a serious foundation. After 20 years, the snowball effect truly kicks in, potentially propelling your portfolio to over $1.2 million. Imagine that, a seven-figure portfolio built steadily, brick by brick. After 30 years, you could be looking at a staggering $2.5 million or more. This isn't some far-fetched fantasy. This is the undeniable power of compound interest, the relentless march of time, and unwavering discipline. Yes, some years will feel agonizingly slow, like watching paint dry. But over the long haul, the mathematical truth of compounding simply doesn't lie. Meet Chris, a relatable success story. Let me introduce you to Chris. You might even be Chris. Chris's consistent path. Back in 2005, Chris decided to plant his financial seed, starting with $10,000 in SCHD. Every single month, like clockwork, he added another $1,000 automatically. He never wavered, not in the exhilarating bull markets, and certainly not during the gut-wrenching market crashes like 2008 or 2020. He was a rock, the dividend multiplier. Crucially, Chris reinvested every single quarterly dividend without a second thought. These dividends, seemingly small at first, began to multiply, buying him more and more shares, which in turn generated even more dividends. It was a beautiful, self-fulfilling prophecy of wealth creation. The millionaire milestone. By today, Chris's SCHD portfolio stands at a remarkable $1.2 million, and that's before accounting for the growing stream of dividends. And those dividends? Those consistent payouts now provide him with over $40,000 per year, enough passive income to comfortably live off without ever touching his principal investment. Chris didn't win the lottery. He wasn't some financial wizard. He just stayed the course, trusting in a proven strategy. What makes SCHD a millionaire machine? Let's dissect the core components that transform SCHD into a genuine millionaire-making machine. 1. Growing dividends. SCHD typically boasts an attractive dividend yield, but what truly matters is that these dividends tend to increase over time. The companies held within SCHD are known for consistently raising their payouts. This means you're not just getting a fixed income, you're getting bigger and bigger deposits flowing into your account year after year, like a financial snowball gaining mass. 2. Aggressive growth. Beyond just dividends, SCHD's total return allows your principal investment to grow aggressively. This capital appreciation, combined with dividend reinvestment, means more shares over time, which directly translates to even more payouts. It's a virtuous cycle of growth and income. 3. Minimal costs. Remember that tiny expense ratio. At just 0.06%, SCHD keeps nearly every single dollar you invest working tirelessly for you. Low fees are critical because they don't chip away at your returns, allowing your wealth to compound more efficiently. Every penny saved on fees is a penny earned. 4. Tax efficiency. Thanks to its structure and the nature of qualified dividends, SCHD offers a relatively tax-friendly approach for a tradable equity fund. This means more of your hard-earned money stays in your pocket, contributing to your wealth-building journey rather than flowing into tax coffers. Your action plan, becoming the next Chris. So, how can you become the next Chris, quietly building substantial wealth? Here's a straightforward, actionable plan. 1. Start now, no excuses. The most critical step is simply to begin today, right now. Don't wait for the perfect market conditions. Even a humble $100 a month can kickstart your journey. The power of compounding loves time above all else. 2. Automate your contributions. Take the decision-making out of it. Automate your contributions so you never miss a month. Set up a recurring transfer from your bank account to your investment account. This turns investing into a consistent, effortless habit. 3. Reinvest every dividend. Make sure every single dividend payout is automatically reinvested. Let the magic of compounding take over. Each dividend buys you more shares, which then generate even more dividends, accelerating your wealth accumulation. It's like planting more trees that bear more fruit. 4. Ignore the noise. The financial world is a constant cacophony of economic angst, interest rate booms, and overhyped gurus on social media. Learn to ignore the noise. Stick to your plan. These distractions are designed to pull you off course. 5. Stay for the long haul. This isn't a sprint, it's a marathon. The real magic of compounding, the true wealth acceleration, typically begins to hit its stride after at least 15 to 20 years. Be patient. Be persistent. The long-term rewards are immense. Navigating the investment journey, riding the waves. Of course, your investment journey with SCHD won't always be a perfectly smooth upward line. The market has its moments, its dips and bumps. Enduring market dips. You'll encounter dips like 2008, 2020, or 2022. These moments can feel unsettling, like hitting turbulence on a flight. But look closer. Throughout these periods, dividends continued flowing. Share prices, though they might stumble momentarily, tend to bounce back with remarkable resilience. The power of staying invested. If you had panicked and sold your SCHD shares in the depths of 2008, you would have missed the incredible market rally that unfolded from 2009 to 2021. Staying invested in SCHD means you ride out the market crashes and emerge stronger on the other side. Even after the challenging interest rate hikes of 2022, SCHD rebounded, and those crucial dividends just kept growing. Resilient companies. The very companies that form the backbone of SCHD. Those supporting global consumers, fueling productivity, and delivering essential services. Continue to perform, even during challenging economic times. That's precisely why remaining calm, automatic, and consistent is the true millionaire's secret. Your millionaire timeline, crunching the numbers. Let's put some numbers to your aspiration. Suppose your goal is to build a $1 million portfolio using SCHD. Accelerating your path. Starting with $10,000 and investing $1,000 per month at an 11% annual return, you're looking at reaching that $1 million mark in roughly 17 to 18 years. Want to accelerate that timeline? Upping your contribution to $2,000 a month could get you there in closer to 12 to 13 years. Starting with a larger initial amount, say $50,000, will naturally get you to your goal much faster. Consistency is key. The exact numbers can vary, but the crucial takeaway is that consistent investing is the genuine key. Your goals can be flexible, but your commitment should be rock solid. The power of passive income. Imagine reaching that $1 million portfolio. With a conservative 4% safe withdrawal rate, you could generate a passive income of $40,000 per year, or approximately $3,300 per month. This income is often tax efficient and relatively safe, providing a powerful stream of cash flow. Combine this with continued dividend reinvestment, and that income stream will only continue to grow. This is how you parallel track wealth accumulation and passive income simultaneously. SCHD, standalone or supercharged? You have options for how you integrate SCHD into your investment portfolio. The simple path, 100% SCHD. You can certainly go 100% SCHD. It's a simple, automated, and incredibly effective strategy for building a robust base of wealth and income. Core plus satellite approach. Alternatively, you can adopt a core plus satellite approach. Dedicate 60% to 80% of your portfolio to SCHD as your foundational wealth and income builder. Then, allocate 20% to 40% to satellite ETFs to supercharge your goals. Income boosters. ETFs like JEPI or JPQ could enhance your monthly income. Growth boosters. Tech-focused or AI-driven ETFs might accelerate capital appreciation. International diversification. An international dividend ETF could broaden your global exposure. The satellites are optional superchargers, not requirements. Even with 100% SCHD, you can confidently build a millionaire portfolio. Common questions, clearing the air. Let's address some common questions that often arise about SCHD. What if SCHD cuts the dividend? This is a rare event for an ETF like SCHD. It holds a diversified basket of blue-chip companies, and these companies are generally committed to sustaining and growing their payouts. While nothing is impossible, the chances of a significant, widespread dividend cut across the entire SCHD portfolio remain slim. Can I just buy Schwab or Vanguard instead? You certainly can, and they offer excellent broad market ETFs. However, they don't necessarily offer the same aggressive dividend growth focus or yield that SCHD is purpose-built for. SCHD is specifically designed for the dividend compounding strategy we've discussed. Is SCHD too US-centric? Perhaps if your goal is truly global diversification from a single fund. However, remember that many of the large U.S. companies held within SCHD are multinational corporations, with significant operations and revenues generated globally. If you desire even broader international exposure, you can easily mix in an international fund later on. Final takeaways, your blueprint for financial success. Here are the essential takeaways to cement your path to financial success with SCHD. Start today, ASAP. The single most powerful factor is time. Don't delay your investing journey. Automate everything. Set up automatic contributions and dividend reinvestment. Make it effortless. Think long-term. Compound interest doesn't work its magic overnight. Be patient and consistent. Build momentum. Watch tiny, consistent returns snowball into serious wealth. It's a truly amazing process. Flex when needed. You can add satellites if you wish, but always keep SCHD as your robust foundation. SCHD isn't flashy. It's not a get-rich-quick scheme. But for those committed to becoming millionaires made slowly, sustainably, and reliably, it's an indispensable tool you simply cannot ignore. You don't need luck. You just need the right strategy and the unwavering power of time. Call to action. If this deep dive into the SCHD Millionaire Strategy has inspired you to take control of your financial future, then here's what to do next. Subscribe to our channel for more insights into building lasting wealth. Like this video if you found the information valuable. Leave a comment below and share your thoughts or any questions you have about SCHD or dividend investing. We love hearing from you. Disclaimer: seek professional advice. The information shared here is for educational and entertainment purposes only. Investing in the stock market involves risks, and past performance is not indicative of future results. We are not financial advisors, and this is not financial advice. Always consult with a qualified financial professional before making any investment decisions. They can help you assess your individual financial situation and goals to create a personalized strategy. Your financial well-being is paramount, so please seek expert guidance.